Good day. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Sunday, September the 29th, 2024. I'm going to begin with the NDX, and that is the cash market, and I'm on the 3-year weekly chart. And I'm going to start just by doing a quick review of where we are in terms of the largest degree that I'm counting at the moment, which actually is above all this in a cycle degree third wave. And within that cycle degree third wave, which would consist of 5 waves of primary degree, we are and have been in the primary 5th wave up since October of 2022, when we reached the low in the NDX at 10,440. Now, primary 5 will consist of 5 waves of intermediate degree, of which we only have 1 and 2 complete. Within intermediate wave 3, currently underway, will consist of 5 waves of minor degree, of which we have 1, 2, and 3 complete. And we're still tangling with or dealing with the minor 4th wave, which at the moment, we basically have 2 counts, 2 views, one being that minor wave 4 is still in progress, which is basically the labeling that is showing here. And what would be left would be a minute C wave down to complete the minor 4. And the second is the fact that we did complete minor 4 back at the August 5th lows at 17,435, and that we are running higher in the minor 5th wave. Now, I will go over both of those, but what I've got labeled right here is the fact that we're still within the minor 4th wave, and that we've completed thus far as A and possibly now B. Now, the reason that a lot of this is staying in effect is because the NASDAQ kind of has been lagging. Don't get me wrong. Last week, as we came in on Monday, we had a tremendous rally, a solid built rally. And then we continued to see during the week where the market just continued to move itself higher, but without that underneath thrusting that we would associate with the pattern that it's likely in. So I have felt that because we're running towards the end of the 3rd quarter, and so within that, there's a lot of adjustments being made. There's been a lot of different things that the market is dealing with within the NASDAQ stocks. And much of that, again, is just reorganizing one's portfolio. So and I believe that it will continue through tomorrow being the end of the 3rd quarter, and our arrival at the 4th quarter. And I don't know about anybody else, but I'm like, wow, we're already at and dealing with and moving into year end. And so 2024 is just kind of going right on by. Now, dealing with what we're dealing with inside this particular move, and now I'm going to bring it down. So what I continue to show, let me just reference here. What I'm continuing to show is, of course, the support levels for the minor wave 4. Now, if it's still in progress, then we're looking for a C wave to come down. And I would imagine that it's going to be very similar and take about as much time as it did to put in what we're labeling right now as the A wave. That is just going to be bam, done. And that would suggest this was July the 11th, although it says July the 8th. Okay, July the 8th. And then this is August the 5th. So less than a month. So in fact, what this would really tell me is that October is likely going to be a down month if this kicks in and we start heading lower. And as I just referenced something with the seasonality charts, the seasonality charts are basically showing that there may be some inside the NASDAQ problems that would bring the market lower. But seasonality suggests that we could have a basically similar type month where we'd stay in a range. Now, one thing that we all were recognizing is that September normally can be a more destructive month for the NASDAQ or for the markets, and it wasn't. We actually put in a fairly decent rally during the month of September. And so I'm coming off a low on September 2nd. So there's that possibility in terms of just if we look at the cycles, and that we were looking for a cycle to come in more to the upside, but to the downside in October, that cycle may have come early or may have bottomed early. Again, I'm not a cycle expert. I do my best interpretation, but I do realize that you can get a right and left hand interpretation. And if the cycle did come in early, and then again, coming in again a little bit early on the 2nd. So that was the 5th, and then the 2nd, when we were possibly looking for it to continue through the month of September, it didn't. So we rallied off of that, the low on the 2nd, and basically starting on the 9th, we just started to rally, and it's been up ever since. Now, where can we put tomorrow? End of the quarter. The big talk, of course, has been about that JP Morgan will do their end of quarter roll, their collar. They were going to move it out to December. That's what they do every quarter. And they're using January, March, June, September, December. That's the cycle. So with that in mind, it's basically the way I'm looking at it. If we're looking at like the options flows and the capital flows, we're seeing both coming into action here. Because what essentially I've noticed within the data that I receive about the options flows, where the gamma levels are coming in, where we can expect a volatility trigger, where put calls and call walls are coming in. Well, because we're now up to that last day, the call wall basically in the NASDAQ is below the market. So with this roll that's going to be happening, and it's basically in the SPX, but it will have its effect, I believe, on the NASDAQ as well. We're going to be resetting the floor and the ceiling. So in other words, whatever they do in the puts will put a put wall up. Whatever they do in the calls will be the new call wall. And again, that'll reflect over, I believe, into the NASDAQ. So we're going to be looking for that to happen. So, but also I just need to consider that what also gets released is a whole lot of gamma because it expires and it's being shifted. So that will have an effect, and that effect should or looks like it will be that volatility will spring back to life. And volatility can work in either direction. As long as the market's going up, everyone will be fine with that. So volatility will tend to be sold via the VIX and bought via the underlying volatility. And that's all via the options. So we're looking for that roll to see how is this all going to come through. Now, what we'll continue to pay close attention to are the levels that are going to be marked as the volatility triggers. Now, those right now will be coming in under the market because we've rallied pretty strongly. Well, under the market. So if that volatility trigger gets triggered, it will begin to shift the narrative from a positive gamma atmosphere to a negative gamma atmosphere. And that will switch the whole trade strategy from risk on to risk off. And we've seen these risk off trades. Last time was here, and pretty much right off of the high that we had on July the 8th. And it ended on August the 5th. And we saw the volatility trigger kick in and go to a negative gamma atmosphere, which is risk off. And what we also can say that helps us identify this risk off is that the market can't seem to catch a bid. I mean, we'll have rallies. Undoubtedly, we will have little rallies, but they're always constantly going to be met with harder selling. So once it's done, boom, 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 the sellers come back in and they just take over again as the market continues to work itself lower. Now, how does that fit in if we're looking here? And I'm going to come down and I'm going to go to the daily chart so I can see inside here. So again, knowing our choices, knowing that we've got this background, knowing that we have tomorrow is a big day. It's the end of the third quarter. It's the beginning of the fourth quarter. A lot of shifting, they call it window dressing, but I don't call it that anymore. It's just position adjustments. What's worked, what they like, what they don't like, what's seasonally going to start happening to the market. So we may see, particularly in the NASDAQ, the biotech. The biotech index does have a seasonality factor that begins to show that it may weaken in this quarter as we approach year end. So seasonality, we may see a down October, and then somewhere within November, we begin to rally. The indexes themselves start to show that we probably should, seasonality-wise, possible drop into the end of October. And then at the beginning of November, or even mid-October, we start to rally. And that's in preparation of year end. We drop a little bit into the beginning of December and then finish it with a strong year end rally. That's kind of the seasonality pattern that's kind of being presented. So it would be a down move or weakening and into probably towards the end of October. And then we rally in November. As we get into December, we slip back down, not all the way, but we have a little bit of a downswing, and then we rally strongly into year end. Now that all makes sense because as we approach year end, then of course, portfolio managers and money managers are considering what's worked this year, what do I want to put in for next year. So they're going to be doing a lot of switching around. And again, that will affect the options flow. That's going to affect that where gamma positions are going to get stacked up and where things are going to look. And so in preparation of all that, we may see a volatility trigger get triggered as things begin to move around. We're beginning to see some, or we have been seeing some of that within the Mag 7. So, and I believe it really will continue because what we're really moving into as well, right? We finish the end of the third quarter. I believe it's going to be the week after. So we're looking at about October 9th, I think it is, that the banks start to report. And I can go right here. We can go to Bank of America. That's October the 15th. We can go to Goldman Sachs. Goldman Sachs is October the 15th. JP Morgan's probably the 15th. So it's not necessarily the 9th. JP Morgan is on the 11th. So I knew it was like the 9th, but they will start on the 11th because the banks come first. So we finish the quarter. They start making preparations, what gets rolled out, what changes. We get to see what JP Morgan, where they're going to put their collar until the end of December. And so we're going to get some ideas on what JP Morgan begins to feel what the market may or may not do into year end. And that that actually, by the way, I think could really put either a boost underneath the market or a hard dent. So Monday, tomorrow, I think is a very important day in setting up what happens not only the rest of the month of October, but really down through year end. So we're going to start to build what the other larger traders may be starting to feel. Okay, so back to just the technical picture right now in the NASDAQ. If I'm going to be counting this as I see it here, and that we are still within this minor four, and now we're doing a C wave down. Excuse me. What I've done is I have just put in the label that there's a possibility that we finished a small 5 waves up, but that then completed minuet wave C and the minute wave B, all of minor wave 4. So what do we have? We're going to be starting a C wave down. Now, this is just sitting there. That doesn't mean that I have any confirmation that the B wave is complete. I mean, I have thoughts, but we're waiting. The market needs to put that in. So what I then, coming down to the 4, basically because I saw the sell-off that came after, kind of gives me a little bit that there's some strength in the fact that 20,273 may have completed the B wave. I'm going to come down to the hourly chart, and now we're going to talk nuts and bolts here. If we kind of come in, there's the B, but if I come back here and I'm going to be counting it, we kind of have to come with a 1, 2, 3, 4, and then we have, at best, it is the weirdest and ugliest diagonal, and just kind of almost blew the diagonal out of the water in this thrust up to complete it. Now, the fact that it reversed pretty much right away off of that high kind of leaves me with, did we do 1, 2 of this first leg down? And if we did, what could we be entering into? The possibility of a third wave down, just to kick off and start with a minuet wave 1 down. Now, if that is the case, then I'm going to go back out to my 4-hour chart, and we're going to add one more, which is going to show us downside. So I don't want to leave it on there when I'm going to the larger charts, because it actually just gets in the way. So we're going to go here, and now I'm going to put that up to here. Now we've got rough C wave points of support. Now, what's the most common? That wave C will be equal to wave A. Boom, right here. 17,050. Now, that fits because, first of all, the C wave does go below there, and not quite a flat, but pretty much we could say a flat. So this low, 17,000, wow, 17,435. So from that level, we look here. We see that high is at 20,675. This high is 20,002. About 400 points more. This is 435, 450. So it fills that the gap that it didn't complete, and it gets added to the downside. So that if if minute C equals minute A, then we're looking at this area. Here we have been there for a long time. This is the support that would be provided by the 4th wave of the minor 4 will find its terminus, its endpoint, within the price territory, normally towards the end point of it, within the 4th wave of 1 lesser degree, and that's this box. Now, we haven't quite gotten down to that low, which is 17,037. That puts it pretty dang close. So ultimately, though, we do have potential. If we go full bore, like something more severe hits the market, then bing, we can end up down here. That would be quite the drop. Now, everybody wants to say, well, gee, that the market's crashing. It's like, no, let me take you back out to that weekly chart. No, the market is not crashing. It's just correcting this third wave. So the anticipation and the expectation, whether it actually begins in November, which I believe it would, according to seasonality, that we would rally and rally intensely. So we might trigger a volatility trigger on the way down, really flipping things into a negative, all those adjustments being made, getting rid of this, putting in this, all these things coming to fruition. And then once it's done, as we have seen before, boom, rally. And that strength push the market from negative back to positive, from risk off back to risk on. So if we come back down in a risk off, all those positions get adjusted and covered and whatever needs to be done. And then when we reach that low, it'll start to rally and it'll trigger back. Because again, we have to understand that as we're moving lower, so are all these levels. They get recalculated. The models recalculate where all of these next levels will come in. And so we'll find that we go through a volatility trigger on the way down. The volatility trigger is likely going to start moving up. So, and what it's going to show is that initially, it may not, but eventually I'm looking for the volatility trigger to flip. And that's going to tell us, it's like once we reach the bottom, this is the level the market needs to surpass to trigger the risk on trade. So again, that's really what I believe is pushing the market. Now, what can add to all of that? Well, of course, we have also Monday is quarter, the end of the quarter. Next Friday, we get the employment numbers. So we got a big volatile day on Monday, and we may see some volatility come back in by Friday because the market now is going to hone in on employment data. Before they had to figure out, well, we need to see make sure that inflation is sticking towards its target. Well, what can upset the inflation? What could upset the Fed and prevent them from cutting another 50 basis points if that's going to be the expectation from the market? So what they got to pay attention to. What could upset the apple cart? Employment. A robust economy does come with its overhang of possible problems. And with that, with a robust economy and everybody getting back to work, is called wage inflation. So again, what's good, and trust me, I'm all for people going back to work or people getting better paying jobs, because it does boost the economy, because now we all have money to pay for these things. But unless they can kind of control the cost of goods, that so that we get in and where we might see price gouging or whatever, that needs to come down. It likely will or won't. So again, putting that all in, we might get a little bit, if those numbers are coming out too strong, that could throw a tizzy into the market, and they might just also start selling. So there are different things that could really trigger the volatility trade, or to risk off, but also trigger a stronger decline. The market going like, oh, that's not going to happen. Because really what the focus will become is like, are we going to get that additional rate cut by December? So we get enough here in 2024 that now we're looking ahead into 2025 with a lot of green lights. So that's kind of, if you read up, that's what they're talking about now. Also, what we got going on still, we cannot deny or diminish the US election in November. And it's not just the president. election, presidential election. It's up and down the ballot, folks. It's control of the House, it's control of the Senate, and then state to state, it's control of the state legislatures, all the way down to the local. So this is a huge election up and down the ballot from local to state to Fed. So we're going to have that play. What happens? So we might see some correcting simply as we're building up to that, to election day, November the 5th. Now remember, I'm now saying that seasonality, the seasonality charts are basically kind of showing that maybe we're going to have a down October. Okay, well, as people start to factor in or try to factor in what's coming. Again, it's all speculation, right? So, because we don't know anything. We don't know what the results are going to be before they actually get tallied. So, a lot of stuff will go into this. Back to the technical side, we do have the ability, and I'm showing you that if we're in that C wave, I believe it'll go fast. I believe it'll start quickly. Now, bringing it back off this weekly, and let's bring it down to the hourly, well, then is this 1, 2? And again, a little 1, 2. And what are we going to do here? So if it is going to start falling off the cliff, as I might say, well, then we're going to come down here and first of all, break that hourly 50, which is 19,919 or 19,920. I thought that the market has basically maintained itself and continues to at least close at that 20,000 level. Friday, barely, just 20,008. So breaking down further could really jam this pretty hard. And then if we start to break 20,000, we start to break the 50, well, on a moving average basis, we'd be looking for it to drop down to the 200, or at least go try to give a test to the 200. Now, I will be able to fill in additional where we might be able to come just within this move. And that would be, I always just kind of take some simple measurements and just do retracements. Just doing retracements within this particular C wave. So if this is still got room to go up, in other words, we do manage to kind of, there will be some others because I can put another marker there. Wherever this were to come in, there's a possibility that we're still within this last 5. And what we've done is there's 3, 4, and this is only 3, and this would be a 4. But it's already breaking levels that shouldn't in terms of a 4th wave. Because on this little final 5th, it would be 1, 2, 1, 2, 3. And this would be a 4, and it can't break there, and it can't break there, and it already has. So that's why, another reason why I'm kind of saying, well, there's a stronger possibility that the minuet C wave and the minute B wave are complete within the count that shows that we still have a C wave down to do. But the market needs to really get it going. So in other words, I think that what can happen tomorrow and adjustments being made, or just how the market wants to trade to prepare for end of the quarter, what do they don't want, what do they need to move out of. Don't forget that there will be 0 DTE expiration. There will be the positioning of the JP Morgan collar out in December. So it's going to be December 31st, the options that expire at the very last day, trading day of the year. And let me just make sure. So I've got the SPX, December 31st. You know there was going to be one. So, and we are always open on, as long as it doesn't fall on a Saturday or Sunday, we're always open on the last day of the year for that exact reason, because it is the last day of the year. So there's definitely an expiration. And that's what JP Morgan will be moving that collar out to that level. And so what's going to be interesting is to determine where JP Morgan is going to put it. There are a lot of speculation that JP Morgan uses about a 3%. So from where it is, they'll move it 3% either side, which suggests that the put side will be around 50 in the SPX around 5,500, and the call side would be above 5,900. Well, that they would think is going to be the range, but there could be they could flip that on us. So again, I think it's going to be very, very interesting as to where JP Morgan puts that collar. All right, back to the NASDAQ. Taking everything in, it's very difficult to pinpoint and say, this is where I think the market could go. I actually think that because of some of the weakness that we started to see, the market started off great. And in fact, because of Friday's expiration, in preparation, I think of it today, but I saw, we saw that Apple went up 230. They have monetized those calls. Whatever they needed to monetize, they did it, and the market dropped back down. We saw Meta start to give up some of its loftiness. Microsoft, again, doing some correcting after, having a very positive run up towards 440. So adjustments will continue. I believe that what we just need to look for is if we start to break below the 50, that'll give us a little bit stronger clue that, okay, we're going to be heading lower and likely in the beginning stages of a minuet, wave one of minute wave C. Again, that C wave will be 5 waves. So it'll take 5 waves to get us down. And let me go back out here to get us out here. So yes, that's a lot of support coming all the way off. But I think if we start flying through these support levels, the geopolitical situation, the politics in the United States, the election, the employment numbers that come out on Friday, different things that are going to be happening could just provide this rally's done, and now we're going to go down. And again, in an Elliott basis, it would be completing a minor 4. What comes next is a minor 5th wave. Again, seasonality does suggest that we will have a strong finish to this year. So that suggests that whatever comes down, if we do it in the month of October, once it's done, we're likely going to rally very strongly, right up and out of it, and bring it all the way back. And if this completes minor 4, and we do manage to get down to here, then minor wave 5 will kick off similar to this. But in this case, it truly won't just laze around. It'll go. And that might be the year-end move. And which could likely then carry over into 2025. Now, upside, even if this B wave is not done and we still have a little bit more upside to do, we have that resistance at 20,900. And then we still have these two fib levels go along with if this B wave is going to become an irregular B wave. That would suggest that we go above the existing high, which is 20,691 in the cash. So once we go above that, then we're in not uncharted, but yes, because there's new all-time highs, but we're also just in irregular territory for the B wave. So under this count, yes, we could get to 2145, 21,900 and still be within an irregular B wave and come all the way back down. Now, what that would suggest as well is that the seasonality takes longer, or we did bottom early in that cycle. And now we're just going to go. And it does also give a little bit more credence to the possibility. Now I'm going to talk about the other. So we still have all these levels at I would not consider that one a level. I would consider it to be a third wave. So let me reverse this now and say that we put the 4 here, and this is 1, and this is 2, and we're inside the third. So what this then becomes, bringing it back down to that hourly chart, is here. We're marking it as wave B. If we're showing or going to the additional count, that's going to show minor 4 complete here. So this would be minuet wave 1 of minor 5, minuet wave 2 of minor 5, and I believe this would then, because it's going to end up being 5, it is minuet wave 1 of minute wave 3. And if that's the case, we are going to fly. That would suggest that the seasonality for October is already in. And so that pushes up the upcycle, the kickoff to the cycle that takes us up towards year end. That's coming in early. And it's possible. So what would that suggest? We go right through all of this. And if we're in this third wave, well, there's if wave 3 is equal to wave 1. Not in this case, because third waves are normally the longest and the strongest. But for sure, it could possibly be here, wave 1 of 3. We come down in a 2, maybe not getting any further than 19,600. Just do a normal. I mean, we actually can come all the way down, but as long as we remain above 19,000, then it very likely could be a 1 and a 2. So, and I say this because we could start to move out in this thing, and it is wave 1, and we're counting wave 2. And at the same time, I got to run both of them side by side, that it is a C wave, and it's 1, 2. So there's a lot that still has to unfold before we can definitively say, yep, this is what's going on, plan for that level. This is what's going on, plan for this level. And that's what I think. You think it's confusing me or all of us as traders. If you're a position trader and you're in it for the long haul, no matter what, even if we drop back down and they completes the 4 here, I still think we have a wave 5. So, how do you want to make an adjustment to your long-term position? If you're believing that you're in it for the long term and you believe that we will go higher, then you don't need to make adjustments other than possibly, and again, I don't make recommendations. You just delta hedge it in terms of what your losses could be coming down, and you just put on some puts. Either puts in a stock or puts in an index or puts in the Qs or puts, wherever you need it. There are enough instruments that you could put on puts that'll cover you for any damage that could be done on the downside. And then when you feel it's reached the low, well, you get out of the puts. And actually you could double down, put on a few calls and ride them all up along with your stock. So I don't make recommendations on how people should trade, but I will say that we still have the possibility and we have to run both possibilities. Now, again, moving up, this would be to kind of coming down to where we can find support. Again, why am I using it? Well, if I have to put wave 1 here, I'm looking for an A, B, and a C. That C should bring us down to 382, maybe 50, because it's a wave 2. If this is 1 and we're looking for a wave 2, most common, 50 to 62%. That brings us down to here. That's still a nice tumble from where we are. It's 700 points, 500 points, 200 points from where we are. And that's the most common. And they might come down and just give a test to the 1 hour 200. So they break this, they come down to there, finish. That ends up being a 1, this ends up being a 2, and we pick it up and we rally all over again. That would be the one version of what I'm following here. That this is the 4, 1, 2, 1 of 3, 2 of 3, 3 of 3, and that rally would take us likely much higher. These two would be disqualified, and we're looking at a break inside. Now, once we get levels, yes, I can add levels. But just straight out, if this is 1 and this is 2, wave 3 would likely be looking at, in total, 22,450 via the cash. Now, is technical, right? I am not saying this is what the market is going to do. We're looking technically at the market. And once we pass that, how high can it go? Well, it's very hard to determine because the market's never been there. So we use Fibonacci, and that would be one indication. There will be additional indications. We have that indication for a, we did have that indication for a C wave, but that's for that level. I thought I had already put the other one up there, but I didn't. I will. We have for C waves, excuse me, for fifth waves, we have upside levels. I have taken them down because it gets too crowded and I don't want to be disillusional in terms of timing. So, but right now, I've left this up because this would be if it's 1, 2, and we're in a third, where we go 1, 2, I think that third could get up to there. We'll have better ideas once the moves start and once they occur. But right now, I'm filling in the blanks for both sides. If this is the completion point for B and we're doing a 1, 2, 3, 4, 5, and it ends up being the minuet wave 1 of minute wave C, and we'll have a bigger clue. And wave 1, tough to say, well, it should be 2, 3, 6, 3, 8, 2, 56, 1, 8. We're looking for it to start to just to come down in 5. So that's what we'll be looking for, is the development of 1, 2, and then this should be 5 in and of itself because it's a third wave. Now, how do we want to calculate that against the alternate or the other view? Is that this is minuet wave 1 of minute wave 3 of minor wave 5? Well, 1 or A, B, and we got a C wave, which will be our own 5 waves. But here we have the support. The 200 at 19,592 and 19,560. Right there, with the possibility that we could drift or we drop down to 19,340. All in the possibility, but we'd be looking for an A, B, C. If we're in the C, it's got to be 5. All right, so that's the look at the NDX. Longer term, no matter what the count, either we're going to come down in a wave 2 and launch in a third on the one side of the view. If that C wave has got to be complete, we're going to come all the way back down below all of this, likely towards this area, and then rally. So no matter what, I believe after each of these, if this is a 1 and we're correcting in a 2, or whether this is a B and we're now correcting in wave 1 of C, that's the point we're watching for. That's what we're looking for. We want clarification. So I got to take it day by day, hour by hour almost. Not enough has happened. There's too many possibilities. Well, actually 2, but neither one has been disqualified over the other. That's why we're running them together. So it should provide, as far as short-term trading, swing trading, day trading, I think there will be plenty to do and lots of money to be made. But then it's intraday trading. And you're trading the same technical picture, but you're dropping it down. You're putting it on a 15-minute chart. And here you go. Cleaner, right? A, B, 1, 2, 1, 2. So what do we got going on? Either this goes kablooey or it's coming down in an ABC. Here, A, B, C. 1, 2, 1, 2, 3, 4, 5. So I got 2 ways I can look at it. That it's a small 4 and we go up and we likely get up towards these levels a little bit more. That one's up too high. I don't see that. Activate. Let me bring it back down, put it there. There you go. but we do have upper levels here, like right there. And that would produce a strong rally. I'll fill in the blanks though. To be honest with you, I would fill in the blanks. If this turns into a small 4, then I'm going to run it. And you're running it from there to over. And it's going to be weird because I got overlap everywhere. But hey, market does stranger things. All right, so that's the small. That's the NDX. I'm going to go back out to the daily and just take a look real quick. What do the moving averages tell us? They're actually still very much in alignment and all pointing higher. So unless we start to see the breakdown and actually on the daily would need to come down and break the 20 to really give the credibility to that B wave being done. And we're now going to come all the way back down to here. Otherwise, we're holding and we rally. Holding, we rally. Again, both sides. B wave, C wave down. Wave 1, wave 2. We come down and break it, this holds. Wave 2 is 382, pretty normal. It has the capacity to go 50 to 62%. So we can break there, hold there. Still 1, 2. So we got a lot going on, but it'll be tradable inside. All right, let's go over and take a look at the NASDAQ future. Basically the same, but I'll tell you, it gives me another reason as to why. So I'm going to go ahead and bring this all the way down to that hourly chart because I can count to 5. Right? I'm looking for a C wave. So I got 1, 2, 3, 4, 5. So that's why I came up with, I'm going to put the B wave there, but I'm also going to talk about what happens if it's wave 1. Right? So it's the same. It's exactly the same. If I come out here, if it's the C wave, I'm going to put a B on top of that, get out of the pool. We're coming down. And we then have, I took it off. I got this one here. What is that one? This would be as if it's going to come down in a third wave. So but I need to put in one more, which is going to cover us on a little bit larger scale. And that would be that I come from there down to here and back up to this level. And now bring it back down and look on the hourly. So I've got these that are coming in way lower. Okay, so there it is. And they're the right color. So this is all for the smaller move up here. And these would be for that larger if it was a C wave coming down. And we've got here is where we'd be looking. That C would be equal to A, 16,900. So that takes us below that level, below the bottom there. But it's acceptable because it's still within the 382 and the 50%. Basically, we would be looking for something to come back below 17,580. And that's basis the December contract. This before, I think, on the September contract was 17,000, 351, 341. And now we're coming down. If we use the December contract, it's 17,738. So, and that we have 612, which has basically been broken a little bit. So again, we're looking for confirmation of which is a move. But that would be if it's the C wave all the way down, those are the levels. A little bit longer term, right? Everything else fits in. Everything I talked about for the end of the quarter tomorrow. What we're looking for possibly coming out on Friday. The seasonality is the same for the NQs it is for the NDX. And the Qs, as a matter of fact. So a lot of things are going to come into play, and we're just going to wait and see what the market and how the market wants to react. So if I'm bringing it back down to the hourly chart and I open this up a little bit more. So we're going to go in and we're taking a look at this. I could have a 1, 2, and we're inside that third. 1, 2, and now we're dropping. That would suggest that we just continue, and we might gap this afternoon or this evening when Globex opens. And then we'd be looking for it to head down, right? We broke on Friday below the hourly 50. It already lines us up to come down and give a test to here. And just on the fact of what we got going on here, 100% down to equal that is at 20,039. And that, as a matter of fact, could put this as a wave 1. Maybe. That would be ABC. ABC. So I think it could hold, but then we're looking at this. A, B, 1, 2, 3, 4, 5. Yeah. So I think it will come down and break that. It just seems to be lining up to break the hourly, not finishing real strong. So we'll see what happens. We have that support at 20,039 or 20,040, and we also have it at 20,065 with the 200. That can get broken. That's going to shift this whole narrative and throw it lower. Let me just go out and look at the daily to see what the moving averages look like here. You can see they start to going flat. This is going flat. This is starting to round and move this way. So the NASDAQ cash has got a little bit more positive because this trades longer. And we saw, how they wanted to leave it at the end of the day, the end of the extra hour, which may have already started what is going to continue working through tomorrow. So I think that we have stronger downside here rather than we might still go up. There is still that possibility, but I don't necessarily see it because I can right in here. Again, this is not, it's just ugly. It's just ugly by ugly, all of this. And then to do that and then thrust up and out of this thing. So there's just too many choices. I can mark it as a completed 5, by the way, and that's all ugly. But there's a possibility. And then what we're working on is if it still had upside potential, I'm working with the same deal. Okay, well, that would be a wave 1. It's already broken it. Wave 4 has already broken it. If this is 1, 2, 3, well, that already got broken, so that's out. So this would be 1, 2, 3, 4, 5. Even if that was a 3, and this is now would be the 1, and we've already broken it. This one, we almost. This ever came into play, it's been broken. So it's like anywhere you want to start to look at what could possibly this in relationship to this be. That's why I actually have labeled it 5 and C. The alternate or the other view is still 5 of minuet wave 1 of minute wave 3 going up. Again, push it out, take a look. ABC minor 4, 1, 2, 1 of 3. So we're looking for something seriously big. Now, bringing it back down, 1 of 3, A, B, C. Then we'd be looking for 1980, that level. Now, what, again, let's take a look. We're going to just put just the straight retracement levels. If this is a 1 and we're looking for the 2, 382, 17,780, 19,785, 50% also, right? So we got the first one, 1.618, coming right into that area. Here's the second cluster, 50 to 2.618. That fits there. And then the lone holdout, if it goes to full 62%, which is possible for a wave 2, just cannot go past there. If it did, well, then it breaks this 1-2 idea and throws it over to it's a C wave. But we have to allow it to come all the way down into there before you're going to really get a strong signal. No, it's not a 1-2. It's a C and the B, and we're in the C wave down. Then we're looking for minimally down in here. Okay, so that's that. Our moving averages are not looking that bad. Again, the NASDAQ in particular, the NQ and the Qs, all those levels in terms of gamma levels, in terms of volatility triggers, call walls, the call wall in the NASDAQ remains below the market. And so that's a volatility trigger. And that could swing this whole thing just into a stronger decline. We've seen them. Last time we saw it, folks, was here. That's September. This was the time before. This was a volatility trigger. This was a big volatility trigger. It took us to those August lows. So we shall see. We shall see how this all plays out. We know we've got some markers, we've got some ideas. And the same way that I would suggest if you're trading, if you're a position trader, you get to make the choice. Do you want to just sit tight with your positions, or do you want to kind of give yourself a little protection, write it down, get out of the puts, write it back up? And it's up to each one of us as an individual. All right, I am going to finish it right there. The next daily, Elliott Wave Daily, will be on Monday, September the 30th. And we'll see what all happens. Enjoy the balance of the weekend.